Welcome to today's What Moved the Market show. I'm your host Prem. It's Wednesday, October 1st, 2025, and here is everything you need to know as the markets close for today. Let's kick off with a roundup of today's dramatic turnaround. After an 8-session losing streak, Indian equities surged on Wednesday, bringing much-needed relief to investors. The BSE Sensex closed firecracker strong, jumping 715 points higher at 80,983. The Nifty 50 put in a similar performance, gaining 225 points, or 0.92%, finishing the day at 24,836. Bank Nifty led the charge in rate-sensitive pockets, climbing by 1.3% to finish at 56,374. The mood across Dalal Street shifted firmly to risk-on as the Reserve Bank of India kept the repo rate steady at 5.5%, soothing market nerves about interest rates climbing further this year. Notably, the central bank projected GDP growth at 6.5% for the year ahead and trimmed inflation expectations to 3.1%, further improving the sentiment in the equity markets. On the currency front, the Indian rupee traded steadily and closed at 88.8 against the US dollar. While this remains near historic lows for the rupee, today's stable close brought a dose of calm to the forex markets after last month's volatility. This relative stability helped further support the positive sentiment across equity markets during the session. Let's spotlight today's biggest movers. Tata Motors was the star performer, rocketing up by around 5% following news of a major demerger plan that excited investors. Kotak Mahindra Bank and ICICI Bank also helped lead the rally, surging on signs of greater regulatory headroom for lending and positive outlooks from analysts about their growth trajectory this year. In the mid-cap and small-cap universe, trends saw impressive gains backed by strong operational updates. On the flip side, Bajaj Finance, Ultratech Cement and State Bank of India were among the draggers, losing ground on profit booking and sector-specific worries. Tata Steel and Asian Paints also lagged as traders rotated out of defensives into riskier growth plays. No new major IPOs were launched today, but filings from Augment Enterprises and Runwal Developers kept the primary market buzzy, while secondary market action took center stage. Turning to technicals, the Nifty 50 has convincingly reclaimed its 100-day exponential moving average, closing well above the key support at 24,700. Robust put writing at the 24,700 to 24,800 levels suggests a solid floor for now, while resistance comes in at the psychologically important 25,000 to 25,100 zone. Bank Nifty also tested resistance at 56,500 and appears poised for a potential breakout if positive momentum continues tomorrow. Let's talk sectors. Rate-sensitive spaces were clear outperformers today. The banking and financial services sector jumped with vigor, riding high on the RBI holding rates and new lending-friendly measures. Realty and auto names followed suit as lower borrowing costs supported bullishness. On the other hand, PSU banks had a lackluster session, finishing fractionally lower after a strong run in previous. Now zooming out to policy and macro headlines, today's RBI policy meeting was the showstopper. Apart from holding policy rates unchanged, the central bank announced a raft of pro-growth steps, easier norms for lending, raising the IPO financing limit per person to 25 lakh rupees, and increasing bank lending against shares up to 1 crore rupees. The regulatory ceiling on debt security lending was also removed, which is viewed as a positive for capital markets. The RBI also unveiled targeted support for exporters post-recent US tariff hikes, and they maintained zero charges on UPI transactions, a big plus for fintech and payment stocks. Additionally, insurers will soon move to risk-based premium pricing, encouraging innovation in the insurance sector. Quick look at commodities before we wrap up. Crude oil prices edged slightly higher, reflecting steady demand in Asian markets and ongoing Middle East supply concerns. MCX gold finished at 1,16,410 rupees per 10 grams, setting a historic high amid strong festive demand. Silver posted a robust close at 1,44,290 rupees per kilogram, also marking significant gains for the session. Among base metals, copper settled at 949 rupees per kilogram, holding firm as stable global industrial demand continued to underpin prices on the MCX. On the geopolitical front, the RBI's enhanced support for exporters came as a timely response to US tariff actions, reassuring both corporates and investors that policy support won't waver amid global trade tremors. No other major global headlines rocked the bourses today, letting local fundamentals and central bank commentary dominate market moves. Looking ahead, today's strong closing above the 100-day EMA on the Nifty 50, with firm put activity at lower levels, signals a bullish undertone for Thursday. Immediate support sits at 24,700 for the Nifty. If bulls hold, a march towards the 25,100 resistance zone looks likely. For Bank Nifty, watch the 56,500 mark as a short-term hurdle. A close above could spark further upside. Keep an eye on foreign institutional flows. They pulled out a hefty sum in September, and a reversal there could set the tone for an extended rally. Near-term catalysts include upcoming earnings in financials and autos, plus any surprise global data overnight. Before we sign off, here's one actionable tip. With the Nifty recapturing crucial technical levels and RBI's policy stance turning supportive for banking, financial, and realty counters, consider a tactical exposure to rate-sensitive stocks, especially well-managed private sector banks and top-tier auto names. But stay alert to volatility if global cues turn sour, and always protect the downside with disciplined stop losses. That's all for today's What Moved the Market show. Send in your feedback and questions, and tune in for our morning wrap on Friday. Tomorrow is a holiday. This is Prem signing off, wishing you smart investing and a wonderful evening.